We're looking at a really thorough way at the European markets, using some data analysis to find the most suitable investment opportunities. And then that's meaning we're selecting the strongest countries within Europe, which shows strong return in in different clusters within Europe. So we're seeking the best countries within the clusters in Europe that has the strongest performance. And therefore, we're looking at the moment for investment next to, of course, the Netherlands, in Germany as being the strongest country within the Eastern cluster. France, in our opinion, being the strongest country in the Southern cluster, and then also looking at the UK. We're more or less doubting about the Nordics because there are strong outlooks for the Nordics, but it's really hard to find some suitable investment opportunities over there. And and next to those data analysis, of course, we are looking at fundamentals also. And maybe it's more interesting not only to look at the demographic growth. For us, it's really interesting what is the urbanization rate is doing. Because when you look at the demographic growth of the urban areas, it's much higher than the average per country. So, and that's a trend you see in all Europe. The European cities are, the most European cities are doing really well and showing much higher economic growth than the country on an average. So our job is to select the best cities with the highest expected growth.
So so you're taking it much more from a city's perspective rather than necessarily a country's perspective?
Well, no. First, we're selecting the most powerful countries, and within the countries, we're selecting the most powerful cities. We invest both in a fund-to-fund strategy, and then we have several hundred millions invested both in France and in Germany. But I think in December 2013 we bought ourselves a portfolio of 250 million euros of German residential units. And last year we succeeded in buying a French retail portfolio. We had really a big discussion with our clients about it. But also when you look at France in general is really tough, showing low growth perspectives. But we're investing in the biggest 5 cities in France, and they're showing really different kind of economic perspective. And even on the retail side, it's very promising.
As I mentioned before, I think it's quite hard to really look at countries or cities and then try to identify clear winners, because I think it's very much opportunity driven, meaning what type of what is product availability. And therefore, with all this optimistic outlook for investment volumes, my main point will still be where's the product coming from and who is selling. Because we all see that equity is much more relevant in the current market environment. Is the financing are less debt sensitive as it has been before the last crisis. So who is providing the product, and how can we really generate attractive returns? Because funnily enough, when Thomas was talking about driving with the rear view mirror, looking at investor side, the return requirements are still more or less simply the same we've seen 5 years ago, although government bond yields are a third or fourth of what they have been before the financial crisis. So we are still working with some kind of yield requirements that are coming from a historical point of view, and therefore I cannot pick a clear winner or a clear loser in Europe. I think interesting markets have been in the past. Dublin, I've been a promoter of Ireland for more than a year now. But I think a lot of the story in the Irish market is over right now. There still are opportunities in Dublin to be found. There can be opportunities in Spain, but I think a lot of the Spanish investors, or at least the Spanish holders, are not forced to sell, so they have their reservation price, and if you're not bidding at least that price, they will not sell to you, and the yield levels on these price levels are not any kind of attractive for an investor to enter. The Nordics are interesting, but already mentioned, it's a very, very closed market, and even a more closed market than 5 years ago. If you look at Sweden, for instance, it was a quite international market 5-6 years ago, but currently I would say if you want to buy something in Sweden, you have to be a Swedish investor. because simply the pricing is that aggressive, and then as a Eurozone investor you're still entering a currency position, and if you want to hedge that currency position you're very uncompetitive to any kind of reasonable price property.
Okay.
So that is the main view, and in looking at the UK, it's the most liquid market, but the question still is pricing is an issue.